So once again, Dave Knight here at Knight Capital Management. Thanks for listening, and thanks for watching, obviously, as well. We're continuing our series here on our eMini Bull Bear Basic, our free method. And we want to, as a way of recapping, let's talk a little bit about what we learned on our last video. On our last video, we talked about the 50 bar MA, signified by this gray line, as it's cutting through prices. We talked about the 200 bar MA right through here, the brown line. We talked about the prior day high, our green line up here. And we talked about the prior day low through here. We talked about trend. And we talked about counter trend. Trend in this case means the 50 bar is underneath the 200 bar MA, helping us to say this is the trend. And our counter trend, a movement to the other side, would be the 50 bar underneath, moving up towards the 200 bar MA and further, making it what we would call a counter trend. Now let's move on today's topic. Today's topic is the average daily range, and we're also going to talk about the upper average daily range, the lower average daily range, and as time permits, we're going to talk a little bit about the CCI and continuing with the CCI on our next video along with the volume. Let's talk a little bit about the average daily range. The average daily range is a calculation on the high and the low over a 7-day period of time. Without getting into any further side of that, let's just leave it at that. So let's bring in the ADR right now and find out where our range is on today's date, being 11/30/2009. Okay, so we see our average daily range up here, a daily range, at 11.5. This 11.5 helps us to determine how far the range is going to go up and how far the range is going to go down. So if we would take our low of the first bar here, our first 5-minute bar, which our low came in at 10.82 1/4, and if we would add 11.5 to it, we would come up to 10.93.75, right around this area. So that is our upper average daily range, our U. Likewise, if we would take our high of the previous high of the 5-minute bar right here, opening bar, which was 10.87, and we'd take away 11.5. Once again, 11.5 went from 10.87. We come around the 10.75.5 marker, roughly in this area, signified by an L, meaning the lower average daily range. So up here for our upper average daily range, our U. Sorry, that's a little hard to draw freehand here, but UADR and their LADR. So let's take a look at this as it relates to the charts itself now. So once again, here is our upper average daily range, signified up through here, and here is our opening lower average daily range. Now you can see that the lower range moved up with corresponding with this move up through here. And you can see that our upper range did not move along this move up. But once the range started moving down, it moved down until it reached this point right here, which is the high of today. And it did not go any lower than that for the rest of the day. Now if this high would have come and shot through here, this would have adjusted up with it. Likewise, if this low would have run through here, whoa, that's kind of crazy arrow, this would have come down with it as well. Let's get rid of all that again. What's the significance of the upper and lower average daily range? From the very first video, and maybe you've seen it in other videos I talk about the rubber ball bouncing effect. So it comes down here, or it goes up here and bounces, and you can see it found a place to bounce and then it went back down. And it comes down close to the lower average daily range, bounces, and then finds its way going back up. So our range itself can be kind of an area of how far can the market travel in one trading day. And it's signified by the L for lower and the U for upper. Upper average daily range, lower average daily range, and obviously here, up here, the ADR standing for the average daily range, giving you how far is the range itself. In this case, 11.5 from here to here, and 11.5 here to here, and it adjusts as it moves forward, but it can widen if the market moves through, going up through here. It can widen, and it can widen down if it continues to move down. I know that's a lot of drawing. I think the key concept to take away from the ADR is where is in relation to the LADR, and how far can you set something up. Do you have room for profit? We talk about the NERF, right? The NERPF. Do you have enough room for profit on a trade? Do you have enough room for profit on a trade? That is the key component of the strategy at the basic level. When you're taking on a trade and it's crossing over this 50 bar MA, do you have enough room to take on a trade for profit? Do you have enough room to take on a trade for profit as it crosses below? Now we'll bring in further concepts in our next level up, which is to be the eMini Pro, and also what we're considering our income producing, or our second level, and then further define it later on in our wealth building component that you'll see coming in our videos in the future. So as it relates to our basic understanding, what we need to know is where is this level and do we have room for profit in front of it. Let's talk about, for the next minute or so, let's introduce the concept of the CCI, the Commodity Channel Index. Okay, I got rid of the price chart because I just want to talk about the CCI right now. Right now we're looking at it as a line chart, and there's significant levels that we want to be looking at as it relates to the CCI line. Where we want to pay attention to, obviously, is our 0 line, our 100, plus 100, and our minus 100. I think you understand, plus 100, minus. Our green line right here is plus 100, and our red line is minus 100. Now, some people like to look at it as a line, but other people like to look at it as a histogram. So, underneath here, above 100, below 100, and then they like to further define this, kind of with the Christmas tree colors here, as I like to see it. Red when it's underneath the 0 line in the negative area, and green when it's positive going up through here. The key areas that we're looking for in this strategy is when it's above the 100 mark. And likewise, when is it below the 100 mark. As you can see in our 5-minute charts, this is still a 5-minute chart. We were above the 100 roughly through here. We were below it through here. We're below it through here. Now you remember that we had that down run there. We had a little bit of choppiness at the mid-range right through here, also through here, and right through here we had that upward movement at the end of the day. So you can see the kind of the market as it's forming here. Remember 11:30, we went up, then down, sideways, and then up at the end of the day. All of this is kind of shown in our either a histogram or a line chart with our CCI. On our next video, we're going to talk a little bit more, bring the CCI into the price chart, and we're also going to take in our volume on our last video here, and then we're going to put it all together on the video after that. So right now you're looking at 2 more videos on the eMini Bull Bear Basic Free Method. Once again, we'll further define our CCI on the next video, and we're also bringing in volume. Then we're going to put it all together, putting it all together. Last concept I want you to remember here, the purposes of this, as you're looking to buy when it goes up, you're looking to sell when it's below the 100 mark. So here is like maybe a buy area. Here's maybe a buy area through here. So you had 1, 2, 3 buy areas during the day, and looks like you had 2 possible sell areas. And we'll bring in the CCI into the price bars on our next video. This is Dave Knight here at Knight Capital Management. I want to thank you for your attention. I appreciate your time. If I can answer any questions, please feel free to email me at support@knightcapitalmanagement.com. We'll talk to you on the next video. Once again, we're going to continue our CCI and also bring in the concept of volume. Have a good day. Good trading, everyone. Take care. We'll talk to you soon. Bye now.